South African firm is betting on Bitcoin to combat inflation. This isn't just a simple news story. It's a strategic move with profound implications. Now we'll explore why this decision by a company in a developing nation like South Africa is so significant, how it could ripple through the global economy, and what it means for your investments from Wall Street to the JSE. The company in question is Altvest Capital Limited, a firm already listed on the Johannesburg Stock Exchange or JSE. Altvest has just announced a plan to raise a staggering $210 million, that's approximately 3.8 billion rands at the current exchange rate, with the explicit purpose of acquiring Bitcoin and making it its primary treasury asset. This is a monumental decision. It's a direct and public endorsement of Bitcoin as a core financial tool, moving beyond the realm of individual speculation and into the regulated corporate financial sphere. This places Altvest on the global stage, mirroring the playbook of firms like Michael Saylor's MicroStrategy in the United States and Metaplanet Incorporated in Japan. These companies have seen their valuations skyrocket after converting portions of their balance sheets to Bitcoin. Altvest isn't just following a trend, it's trying to become the first publicly traded African company to do so, a bold move that could set a powerful precedent for the entire continent. Now let's unpack the why. Altvest's CEO Warren Wheatley has been very clear. The primary motivation is to combat inflation and to give shareholders long-term value anchored in a resilient and globally liquid asset. In South Africa, the economic backdrop is complex. While inflation has been relatively contained in recent months, with the annual rate hovering around 3% as of the last available data from mid-2025, the country still faces structural economic challenges. The rand has been under pressure against major currencies, a trend exacerbated by global uncertainty and domestic issues. For a company like Altvest, holding a significant portion of its reserves in a fiat currency like the South African rand exposes it to a slow but persistent erosion of value. Bitcoin, with its fixed supply of 21 million coins, is fundamentally designed to be a deflationary asset. Unlike fiat currencies, which can be printed by central banks, Bitcoin's scarcity is hard-coded into its protocol. This is the core thesis behind its use as an inflation hedge. By holding Bitcoin, a company is essentially opting out of the traditional fiat system's inflationary pressures. They are betting that Bitcoin's value will appreciate faster than the national currency depreciates, thereby preserving and even growing their capital. A single company's decision in South Africa might seem isolated, but in the interconnected world of global finance, it's far from it. This move by Altvest, if successful, could have significant ripple effects on the global markets, particularly for US stocks and the broader crypto ecosystem. First, let's look at the MicroStrategy effect. When a company like MicroStrategy began its Bitcoin acquisition strategy, its stock became a proxy for Bitcoin itself. Investors who wanted exposure to crypto but couldn't or wouldn't buy Bitcoin directly would instead buy MSTR stock and drove up the company's market capitalization. Altvest's similar move could create an Africa Bitcoin Corp effect, where its new stock becomes the go-to regulated investment for crypto exposure on the continent. This could attract a wave of international investors, including from the US, who are looking for diversified exposure to Bitcoin and the emerging African market. The influx of capital from foreign investors could lead to a net positive flow into the JSE, potentially strengthening the South African market's reputation as a destination for innovative, forward-thinking investments. This could indirectly benefit other South African companies listed on the JSE as well, creating a spillover effect. Furthermore, this move validates Bitcoin as a legitimate treasury asset. When a company, especially one in a developing economy, publicly commits to this strategy, it signals to other corporate treasuries and institutional investors that Bitcoin is a viable alternative to traditional cash reserves. This institutional adoption is one of the key drivers for Bitcoin's long-term price appreciation appreciation and stability. Each new corporate treasury that adopts Bitcoin adds a layer of credibility, which in turn can lead to more widespread institutional acceptance. The more mainstream this becomes, the more a firm conviction solidifies that Bitcoin is not just a speculative fad, but a foundational financial asset. This narrative shift is crucial and could draw in even larger players, from US pension funds to global hedge funds, ultimately affecting the price of Bitcoin and, by extension, the entire crypto market. Now let's hone in on the United States. How does a South African firm's decision to buy Bitcoin affect the most powerful stock market in the world? The connection is more direct than you might think. Firstly, there's the capital flight argument. As investment opportunities in a globally accessible asset like Bitcoin become available through new regulated pathways, like buying shares of a Bitcoin holding company in South Africa, some US investors may reallocate a small portion of their capital. While the amount may be small on an individual basis, the aggregate effect can be substantial. For institutional investors, this provides a new, geographically diverse way to gain exposure, potentially drawing a small amount of investment away from traditional US-based crypto funds or even tech stocks that have a high correlation with the crypto market. Secondly, and perhaps more importantly, is the narrative and precedent. The success of Altvest's strategy would provide a powerful case study for US corporate boards and institutional investors who are still on the fence about crypto. A successful regulated Bitcoin treasury strategy in a market with its own unique challenges could embolden more conservative US companies to follow suit. This could lead to a new wave of corporate Bitcoin acquisitions in the US, driving up the price of Bitcoin and directly impacting the valuations of companies that adopt it, such as MicroStrategy, and even the performance of Bitcoin ETFs. The crypto market has a significant correlation with high growth, high risk tech stocks, particularly in the US. A positive sentiment shock in the crypto world, driven by news like this, can spill over into the tech sector, boosting the Nasdaq and the S&P 500. This is because many of the same investors who are bullish on crypto are also bullish on high-growth technology. The growing adoption of Bitcoin as a corporate asset further blurs the lines between traditional finance and crypto, integrating the two markets more closely. As Bitcoin matures, its performance and institutional adoption will increasingly become a factor in how global stocks, including those in the US, are valued. Now let's bring it back home. What does this mean for everyday South Africans? The impact is multifaceted and could be transformative. First and foremost, this provides a new regulated avenue for South Africans to get exposure to Bitcoin. As Altvest's CEO pointed out, pension funds, retirement annuities, and unit trusts typically have strict regulations that prevent them from directly investing in volatile assets like Bitcoin. By acquiring shares in a JSE-listed company that holds Bitcoin on its balance sheet, these traditional financial institutions and their clients can gain regulated indirect exposure. This can democratize access to the crypto market for millions of South Africans who previously couldn't participate, potentially allowing them to protect their savings against the rand's volatility and general inflation. This also signals a maturing of the South African crypto ecosystem. The country's Financial Sector Conduct Authority, or FSCA, has been taking steps to clarify rules around digital assets, and this move by Altvest shows that the regulatory environment is now conducive for such large-scale institutional moves. This could attract more foreign investment into the South African crypto space and lead to more local innovation in the blockchain and crypto sectors. However, we must also acknowledge the risks. Bitcoin is notoriously volatile. The price could swing dramatically, and any significant drop would directly impact Altvest's share price, which could be a painful experience for investors. Furthermore, the success of this strategy hinges on the company's ability to actually raise the massive amount of capital they've announced. While the ambition is there, the execution remains to be seen. The company's current market value is a fraction of the amount it plans to raise, a fact that will be scrutinized by investors. The plan's success will be a test case for both the company and the broader South African financial system's embrace of digital assets. The decision by Altvest Capital to pivot its entire treasury strategy to Bitcoin is a story of foresight and risk, a move that encapsulates the global economic pressures and the innovative potential of digital assets. For the global economy, it's a powerful validation of Bitcoin's role as a non-sovereign hard asset. It adds to the growing narrative of institutional adoption, a process that is steadily integrating the crypto market into the broader financial system. The more companies, especially from diverse geographic regions, embrace this strategy, the more stable and valuable Bitcoin becomes as a global financial tool. For the US market, it's a clear signal that the corporate Bitcoin treasury trend is not just an American phenomenon. It's a global movement, one that could influence the investment strategies of US companies, drive capital flows, and further cement the correlation between the crypto market and the tech-heavy US stock indices. And for South Africans, it's an opportunity to participate in new class of assets in a regulated way, to potentially hedge against the challenges of a volatile currency, and to be at the forefront of a major shift in corporate finance. This is more than just a news headline. It's a case study in economic evolution, demonstrating how a single strategic decision in one part of the world can send ripples across every major financial hub. That's all we have time for today. Thank you for watching.